Hey everyone, me Kevin here. Wow, I am absolutely blown away. If you are interested in stocks, this is a video for you. I'm going to be making a change in this video. I want to share it with you. I'm very excited. I'm going to go through all of the details in this video. We're going to look at earnings from Apple, Amazon, Google, Pinterest, Facebook, and Twitter, all reconciled into this one video here. I'm going to give you my thoughts on each of these companies, and we'll also talk some potential buy targets and buy strategies. And now, keep in mind, this video is of course sponsored by Webull, so make sure to deposit your $100 and get 3 free stocks worth up to $1,600 via the link down below, and of course get life insurance in as little as 5 minutes. You could Apple Pay or Android Pay for it. Okay, let's get started. So let's start with Apple. Apple, amazing company here. If you're newer with stocks, you're just getting started with stocks, this is such a great company. It's a long run growth company. It's down in after hours about 5.4% after earnings today. Part of that has to do with lower iPhone sales. However, I personally, I wonder, and I'm scratching my head here like, hello, Apple delayed the release of their iPhone 12 by a month, so we're not getting that initial surge in sales volume recorded in the Q3, which they just reported on, and instead, that's going to now be pushed back to the Q4 of this year. So personally, I don't think this was an earnings miss here. In fact, of things other than the iPhone segment, we had a massive destruction in sales amount. iPad sales jumped to $6.8 billion, up from $4.6 billion. Mac sales, like this kind of thing right here, jumped to $9 billion from about $7 billion. I mean, we're talking massive money that people are spending on new devices at home and computers, iPads and computers, big segment. However, and unfortunately, the iPhone segment definitely overshadowed the earnings here, despite the fact that Apple beat revenue. The lower iPhone sales during this quarter definitely hurt. Now, Apple still has $191 billion in cash on hand. That is down $14 billion from last year, but this is an insane amount of cash. In my opinion, if there's any safe growth stock to own, it's Apple. This is a phenomenal company, and if anything, this drop in share price of 5.4% creates a buying opportunity at Apple, in my opinion. I think we're going to see some decent iPhone figures in the next quarter, although I'm not convinced that we are going to see the super cycle of upgrades. I talked about this in my reaction video to Apple's announcement. I don't think 5G is going to be the player that all of a sudden gets everybody to turn around and say, that's it, I'm going heavy on Apple. So I personally wouldn't be surprised if we see iPhone sales, have their bump with the new iPhone upgrade cycle every single year, which we saw it last year. I think we'll see it this year, but I don't think it's going to smash any records or any anticipations out of the park. So for me, Apple, this is a buy stock for me, under 105, under 110. I'll trickle in along with my regular holdings other than that. So what I mean by that is, rather than buying Apple individually at the moment, even though it's just dropped 5.4%, I'm still happy to buy Apple as part of a larger portfolio. For me, that's about 5 to 6% of my portfolio, and I do not mind buying Apple. If anything, Apple just went on a little bit of a sale. But I am worried that even though we're going to see these iPhone numbers show up in the next quarter, we're just not going to see that big upgrade cycle from 5G. So Apple, definitely not huge growth in the long run, in my opinion, for the share price. Definitely a great stock to own, though. I think it's a crucial piece of really any portfolio to create that stability in a portfolio. Great company. Google smashed earnings, folks. This was huge. I mean, just the amount of ad revenue that Google got from YouTube, which is obviously where you're watching this, $5 billion in ad revenue coming into YouTube alone. They've increased their employee count 16%. Their advertising revenue across the board has just exploded. And this is really good. I mean, more people are shopping at home and more businesses are realizing, hey, if we want to get eyeballs, we got to advertise. And that's exactly what's happening. Now, a little bit concerned here because advertising can explode, leading not only into the winter season, but remember, we're in an election cycle here. So it's possible that some of these numbers might be pretty juicy right now and for the beginning of this next quarter here, obviously in October, because we're already in the next quarter. Advertising revenue goes through the roof during political times and then goes up as well into the winter. So that's good, but I wonder how much of this boost in advertising revenue is going to be based on politics and the election cycle, in which case the first quarter next year could be a little softer and we might have to dampen our expectations for Google, but Phenomenal company, definitely a company to own. Personally, I like this stock much more when it has a 1 and a 5 in the front. I think it's close to $1,700 at the time of this recording, and after hours, it's up like 8.4%. This is another one that I will trickle into in my portfolio. Not super jazzed about buying this one individually, and certainly not when it's up 8.4%, but great company, and their cloud business is blowing up on top of that. Their cloud business grew 45%. That is insane growth year over year. And that right now, Google, their cloud structure has generated more revenue in the first 9 months of 2020 than they did in all of 2019. And again, so they're up 8.4% after hours. Great company. Next quarter, they'll also be breaking out their cloud earnings separately when they report their earnings. So that way we'll get a better comparison of sort of quarter over quarter metrics for Google. Great smashing earnings here, though. Definitely a company to own as well. So Google, Apple, we've got one down, one that's up. I think both of these, you got to have them in your portfolio. 4 to 5%, right around there. Perfect weight, in my opinion. I love these. Just like I love Amazon. Amazon's down about 1.5% at the time of this recording. This company is hiring like crazy. And, that creates some complications. When you're hiring like crazy, especially in a pandemic, you got to provide more masks. You got to provide more worker safety. How many more stories are we going to see during this pandemic of Amazon employees going on strike because of a lack of proper safety standards because of COVID or people getting COVID? Of course people are going to get COVID. They have over 1 million employees now. They added 250,000 jobs just in the last quarter. 100,000 of those are seasonal, yeah, but still 250. 100 of those are seasonal, but 250 in total, that's still an extra 150,000 people. Their demand is explosive. In fact, if we compare their revenue for this quarter compared to year over year last quarter, or last year's quarter at the same time, Q3, we're up 37.3%. And if we go back one more year to 2018, we're up 70% in top line revenue. That's how much people are using Amazon to buy has exploded in the last couple of years. This is a company that also suffers from the law of large numbers. It's a huge company, but in terms of owning this company, quality company, love it. Their Amazon Web Services also grew at a pace of 29%, slower than the 35% we saw last year. Again, law of large numbers, going to be hard to kind of keep sustaining massive growth figures. But in terms of safety and a company to hold and own long-term, you got to have Apple, Amazon, Google. These are phenomenal companies. Personally, I like Amazon when it's under 3,000, even over 3,000. I mean, if we just look back 6-7 months, it's like, oh my gosh, Amazon 3,000, no way. But for what it is now, right now in after hours, we're trading at about 31.47. To me, if we can get this under 32, ideally under 3,000, if we get any kind of larger pullback in the market, but this is a great company to own. So any of this pullback here, this 1.5% pullback, to me, another opportunity to buy it, keep it in the portfolio. Facebook's actually not something I'm very heavy in on. I've lost a lot of enthusiasm for Facebook. We've got a lot of drama with Facebook and censorship. Obviously, Facebook and Twitter are both falling victims to this. Facebook's pretty much flat after hours. Their daily active users are up 12% year over year. Their employees are up 32%. I mean, that's huge employee growth. So, I mean, hats off to Facebook. They are hiring like crazy. And this Facebook and Instagram, great work here. Revenue at Facebook was $21.47 billion, much better than expected, but still, stock mostly flat. To me, Facebook, I hold it at about 1% in my portfolio. So I've obviously got like 5 times as much of Apple than I have Facebook. I've got more Google than I've got Facebook. But, great stock. I can't say anything bad about it, except other than it's not something that I see a lot of value in throwing more money into. We'll talk about the value stock coming up in just a moment. But let me also, on that note, talk about Twitter. Twitter's one that I added to my portfolio somewhere around $44, $45, and Twitter ran up today right before earnings. Twitter ran up about 8%, and after earnings, fell 15%. And so Twitter's pretty much right back at $44, which is around where I bought it. And this is mostly because Twitter had its slowest quarter of user growth ever. Like, you look at the charts, it's like up, and then like nothing. That's very, very bad. Only adding 1 million daily users in the last quarter. They gained 20 million daily users. during the last quarter. And substantially many more millions in the prior quarters. In fact, this year, we're up 42 million users, but they only added 1 million of those in this last quarter. Very, very bad sign. That's not good growth, especially for a tech company where we want to see consistent growth upon growth. Not so good. Now, again, Twitter ran up substantially during the day, so most of that was just given up. Twitter still looks like it's down substantially after hours, though, 15%, so they gave up a little bit more. Not so great, but you're seeing a lot of this pain coming in because of the drama going on in the political climate right now. In fact, here's a quote. In Q2, many brands slowed or paused in reaction spending, right, ad spending, in reaction to U.S. civil unrest, only to increase spend relatively quickly thereafter in an effort to catch up. You gotta be careful, though, when you have people basically saying, okay, I'm gonna pause spending on ads at Twitter and I'm gonna put it somewhere else. People might get convinced to put money somewhere else. So for me, I've got Twitter at a 2% holding. To me, if this continues, this growth trajectory, and the next, I might give them one more quarter. But if Twitter goes on to another slow growth period here in the winter after the election, including the election, November, and then obviously December, I'm gonna be very nervous about Twitter's growth going forward because obviously growth leads to more advertisers. Advertisers don't like to spend money on a platform that's declining. If Twitter goes to a decline in monthly active users, that would be devastating. Now, that is actually possible. Why is that possible? Well, think about it. Pandemic starts, everybody's like, oh crap, I'm gonna go on Twitter for the latest news, which in fairness to Twitter, yeah, they had a huge spike. So you get this huge spike, everybody starts using Twitter, then the pandemic kind of starts fading, a lot of us still kind of stuck at home, but still a lot of people went back to work. You stop using Twitter as much. You could actually see a decline in user growth at Twitter, and that does make me nervous. Partially, there's part of me that says I might want to push Twitter down to 1%. I'm not convinced on selling Twitter. I like them in the portfolio. I think Twitter is a great way to get information fast, but I do worry that the market is not going to value Twitter very kindly if they go to a negative active user base. We'll see. We got October and November, so the next earnings report could be promising. So that's why I'm tempted to stick it out with Twitter for the next quarter, see how it is. But after this next quarter, unless this next quarter surprises us and we actually get some solid growth again, I'm gonna be nervous that we're gonna get a switch to a decline, and that's going to be bad news for Twitter. On the other hand, let's talk about the stock that I am like jumping up and down about right now on the inside because, wow. So this stock is up 27% today. Advertising revenue shot up insanely, like 57%. It's crazy. This company is now actively integrating ads with all of their amazing content, and I am very devastated that I deleted this app like 5 years ago and never thought about looking at it again. But now I'm looking at it again, I'm like, holy smokas, this is really cool. So the app I'm talking about is, let's pull it up, Pinterest. Okay, look, Pinterest, more dudes watch my channel than women watch my channel, and the reality is about 2/3 of Pinterest's users are women. So there are gonna be a lot of dudes right now rolling their eyes like, come on. 2/3 of their users are women, okay? This includes 8 out of 10 moms who are often the primary decision makers when it comes to buying products and services for their households, as well as more than half of all US millennials aged 18 to 34. Whew. Look at this, folks. Let me show you why this is blowing my mind. All right, Houzz did this, but Houzz did not do this as well as Pinterest is doing it. I picked up on Etsy about 5-6 months ago, and it was around $70, and I've never looked back. I love Etsy. But folks, here's what I love about Pinterest. And I just installed this app, so don't think that these recommendations are tailored to me, okay? I picked like 3 categories, and I haven't clicked much at all. So anyway, you click this in here, and oh, cool, that's a cool little thing or whatever. You can then click on the picture, and it takes you to exactly where to buy it. Now, many of you might be thinking like, oh, duh, Kevin, come on, like we already knew that. But this is so huge from a branding perspective, and here's why. And this is Etsy, by the way. So Etsy is a beneficiary of this. This is really good. Let me show you one more here. Like this one was really interesting. Look at this, 8-seater swing table. Now that one was expensive. Let's look at something else here. Let's do this one. Look at this bookshelf here. You click on it. Oh, you want that? No problem. You click on it, boom, takes you to roomandboard.com. So you got Etsy, you got roomandboard.com. You got like a million of these websites where people can sell their, expensive products or whatever. And so Pinterest is this beneficiary of being able to advertise all these products without actually having to own them, sell them, deliver them, deal with the customer service on these products. Pinterest doesn't care about any of that because you're buying the product through this. So all that all that Pinterest is really doing is trying to use an algorithm to understand what you might be interested in. See, I clicked on more home objects, so now it's showing me more home objects. Smart. See, I clicked on the thing with the, WD-40 holders. Now it's taking me to tiphero.com for wall organizers. Okay, let's try one more thing. What are they showing off over here? And almost everything is clickable. That is, is so cool. It takes me to this article here, a closet door here, bath door here. This is phenomenal. Look at that, floor plan, everything. If you're gonna remodel a home, this is genius. See, look, and now it knows I like organizers, and so it's giving me more of what I want. This is machine learning for you. Right here, we just demonstrated machine learning. So let's try it again. Let's click on this right here, and you kind of get the idea. So let me get to the point of this because I'm going to talk about the valuation of this. This company is brilliant because they are selling ads to get basically their product to show up here. Now, I have not yet found how it, see, now I'm only getting organizers here. Oh, here we go. See here, promoted by TD Ameritrade. Okay, not bad. So promoted by Target, not bad either. So that's how they're getting these ads in here. Lose weight fast. I wonder if that's a suggestion. Are they trying to say something here? Okay, so you get these ads that are sort of built in here, and they don't even look like ads. They almost kind of, see this promoted by Walmart? This one doesn't even feel like an ad. It feels like it just fits in. That's very, very good. And that's something they said in their annual earnings report. I went back to their annual and then their quarterly. And one of the things they said is they want to provide ads that aren't intrusive, but instead are inspirational. And that is a huge thing that they're doing. And that is in such utter contrast to Facebook and Twitter. Think about this, folks. Facebook and Twitter, more often than not, especially Twitter, very negative. It's not inspiring. It doesn't induce happy feelings. Pinterest inspires inspiration, do-it-yourself project, weight loss, cooking, whatever segments they're in, travel, camping, and all this stuff. And then, you know what? Here, we'll even pull it up really quick while I talk about it. Let's type in camping. Okay, let's do that. Camping. There we go. Camping. Okay, cool. So we got some camping stuff here. I don't know. 26 essential camping dollar store supplies. mamacheaps.com. I'm blown away. So it links you to the blogs, and then these blogs looks like maybe I could buy the things on. So this one didn't look like it had a store, but let's see if we could do another one here. Purple mattress is being promoted after I put in camping. Purple's one that we did really well on. Purple we're up on, like 50% on. Fifth Element, promoted by Target, some camping stuff here. Okay, so a lot of blogs here, camping ideas. I'm sure it'd be easy though for them to start. See, look, we had an advertiser here advertising and promoting this axe. $90 in stock, bespokepost.com. It's a saw and it's an axe in one. Brilliant. How would I ever have found bespokepost.com? I would have never found, I don't know any, I've never heard about them, maybe because I'm not camping right now. I'm sitting here with a fedora and, an Inspector Gadget jacket. But if I'm bespokepost.com, do I want to do ads for combination axe and hacksaw or whatever saw this is? Or am I just gonna go, yo, promote me under camping on Pinterest? Holy crap. I am blown away. So you're going with a positive direction here. You are giving brands the perfect place to advertise your product outside of Google and Amazon, which Google and Amazon, such competitive spaces to advertise on. You're going with positivity. You're also promoting blogs and brands on, together. So you're providing value in here are how-to articles and here are products for you to buy, all mixed together in a place. Houzz.com did this very similarly, Houzz.com, great website. I will say though, Houzz.com was not in my opinion, great at making sure that every picture had something clickable. See, like, let's just pull up House really quick here. So this is an example of House. And what I always found confusing about House is you'll get these articles and then you get suggested products that are like related categories and you're not necessarily getting exactly what's in the picture here. Let's get some inspiration here from Kitchen. Okay, so let's try this one. Let's see if they've improved, because this is obviously competition here. See, look, we have this little tag of an item here. Let me click that. Is that the sink? See, I don't love that. See, they have an algorithm here that that gives you all of these suggestions, but that's not necessarily what's there, because that looks like a black farmhouse porcelain sink. And when I click on that tag, I see what looks like yeah, we couldn't find any visually similar products. See, it's trying to guess, and it's giving me stainless steel. None of these are a porcelain farmhouse. See, this is like a copper. Yep, see, copper. See, this is where Pinterest is crushing House. Like, I would rather browse House, because if I see something, I want that. Like, if I see this, that drawer right here, I'm like, I want that. And I want my apples and my potatoes in that. I want it. How do I get it? How do I get it? I don't know. There's a trash can pull out. Where did you purchase these wire baskets? I wound up finding them through California Closets and Easy Closets. Great. But now you're replying, you're expecting people to actually reply to comments. Pinterest crushing house.com right now. So let's talk a little bit about valuation and what I'm doing. So let's pull up valuation here. I put together a spreadsheet. In my opinion, if we see, the cool thing about Pinterest is if we see 20% growth year over year, in my opinion, for the next 3 years, so 2021, 2022, 2023, just 20% growth, which right now they're growing at like a 55 to 60% clip, okay? If we just go to 20% growth, in my opinion, this is easily a $100 stock in the next few years, if not even more. I'm very, very excited about this stock. To me, I'm comfortable buying this stock. It's a money-losing company right now, which makes it very difficult to value in today's pricing because they lose money. But a lot of their expenses are going into general and administration and research and development as they're fine-tuning their algorithm, and they're growing and finding more customers that are willing to be advertisers. I think there are a lot of dudes like me out there who have no idea what the heck is going on with Pinterest, especially with a percentage of people who are women who are using Pinterest. This makes me very excited about Pinterest. Now, when we look at, Pinterest from sort of a technical standpoint, obviously, it just shot up like 26%. It's down, 1%, 1.5% in after hours. This makes it very frustrating to buy because it's going to be substantially green. It had earnings this morning. It had its green day today. It's going to be red tomorrow. Let's go ahead and put up Pinterest and pull it up. Its RSI is going to be terrible. So this is stock ticker symbol PINS, P-I-N-S. And wow, I mean, we had a large explosion here, obviously, in the share price. Let's go ahead and add the relative strength indicator here and see if we can get the RSI in here. So there's almost no doubt that this is going to be pretty dang overbought right now. Yep, it's overbought. So, it makes it difficult to buy this right now, but wow, I will tell you, I am very enthused. Let's go back to, let's see, March we hit oversold, and then we have not hit oversold since then. Let's go ahead and zoom in a little bit. Let's just go to the last run up here. Yeah, we have not seen this stock oversell in quite a while. Honestly, I mean, we have had a low point here in June, low point in July, a little bit of a low point in September. This is a tough one because the growth here is phenomenal. I'm very, very interested in PINS. This is one of those stocks that I think I want to just be in. So I might not care about the short-term technicals. Part of me is concerned, though, that usually after you get a big run-up like this of 26.92%, you're going to see some sort of sell-off. I hate buying when a stock has run up like this, but the growth prospects here are absolutely phenomenal. I do expect there to be some pullbacks over the next few weeks, and just the broader market's likely to pull back. So what I'm probably going to do is I'm going to put Pinterest into my 1337 collection, probably somewhere around 3%. I'm going to put them right there with Google. I might move Twitter down from 2% to 1%. and then I'll rearrange to find where else I can take to give Pinterest a little bit more love. I do want to leave Upwork in there. I still want to leave Apple, Tesla, Amazon as some of my strongholds, but Pinterest, this is a company that you know, I think we want to be a part of and not a part of not. So there's my big update on stocks today. Thank you so much for watching. Hopefully you found this helpful. If you've liked it, please consider sharing and subscribing. And folks, we'll see you next time.